Dear investors, welcome to Global Investment Academy channel. My name is Kate Zatakavenka, and today we are going to talk about how can you invest $1,000. Okay, straight to the point. First of all, you can invest in stocks. What kind of stocks? What should you do after investing? How can you benefit from them? How to sell options? What is compound interest? ETFs, what is it? How can you invest in ETFs? What are some advantages? Are there any disadvantages? And IPO. Can you be a part of IPO? Do you need to have a lot of money? Is it possible for me as non-professional investor to be part of IPO? To know all about it, watch this video. Okay, so you have a little money, like $1,000. Of course, it will be better if you have a little bit more, but yet $1,000 to invest in stock market will be already fine. Let's say you want to invest in real estate. Nobody will take you as a partner with $1,000 to even $3,000, right? Okay, so we are in the stock market. What do we do? So first of all, I would say it depends on your expectations and the amount of free time you have. If you do not want to, or if you don't have time to pick companies by yourself, but you really want to invest, probably ETFs will be the best solution. What is ETF? It's exchange trade funds whose securities are traded in the exchanges. Or, in simple words, it's kind of a package in which you can buy the market in whole. So let's say you want to buy several stocks, but they are quite expensive on American stock market. Instead, you can go to such fund and they sell it like the whole package of these stocks in a really cheap price comparing to stocks selling separately. So let's say you would like to eat a candy or two every day. So you need like 6 candies, but you do not want to eat candies with the same flavor every day. So you would like to pick different flavors. You go to the shop, you take many candies and you weigh them, put a stick with a price on them. So it takes much time, energy, and all of them cost differently. It's expensive. How do you think? Would it be convenient if there would be all sorts platter in one bag for fixed price? Yes?
Nice.
So the same with ETFs. You can buy different stocks in one bag and you buy one stock. So what are the advantages of this kind of investment? So first of all is a low initial investment. It costs much cheaper than you would choose different stocks. The next is high liquidity. You can sell and buy these assets at any time you want. Then you have the access to international markets. If you would like to buy companies in different countries like China or let's say, I don't know, Europe, Germany probably, there is an opportunity also. And you use this same brokerage account even for ETFs from different countries. That is very convenient. And the brokerage interest in these funds is quite low. It's less than 0.003%. Also, in the Resource Seeking Alpha, there is a screener for these ETFs. Let's see. So I will put a link below this video so you can check it. So you can choose market capitalization, expense ratio, performance, dividend yield, risk or beta, and trading volume. You can also choose a theme, like you would like to invest in IT technology or in some entertainment business. So there is also opportunity to choose this. So you can choose really different ETFs. There are many of them on American stock market, and you could buy them on really cheap price comparing to stocks. Okay, second of all, let's talk stocks. If you would like to buy stocks, you have a small amount of money to invest initially. You can buy different stocks and you want to increase it over time. So here we should remember that we play long. You cannot make much money in, let's say, 3 months. Well, it is possible, yes, but still, you need to remember that you constantly add some money to your account and you widen your portfolio.
How's your portfolio? I'd say strong.
So, first of all, probably at the beginning you should pick dividend stocks. These stocks still should be of a good quality and undervalued, so they have a good potential to grow. So also, if you're a value investor, don't forget about compound interest calculator. So compound interest is interest of your bank deposit in which at the end of each period, accrued interest becomes the principal amount. Thus, in the next period, the interest is charged on a larger amount than in the previous one, due to which the contribution grows at an exponential rate. I have a note here, sorry. So this is not magic, it's real. Check it, Google it, it works like a charm. So if you play along, if you're a value investor, the compound interest is your best friend. In order to increase your profit, you can rent your stocks. If you bought some stocks, you can rent them by selling options. This strategy takes a lot of time and studying, of course. It's more complex and risky. You should know what you're doing. And of course, you need to understand the process in the market. You can also buy options actually without buying any stocks, but this strategy is even more risky than selling options, and you definitely need to learn how to do it. So what are the advantages and disadvantages of owning stocks? So I would say it's the same. You need to choose companies by yourself. You need to read their reports, analyze them, follow them for quite some time. You need to follow technical analysis to choose the best favorable moment to enter. Well, this is an advantage, but still it could be a disadvantage if you don't have much time. Yet the advice here is take your time, please don't rush, don't expect some instant results, systematically replenish your account and expand your portfolio. Okay, the last one, IPO. Let's talk about IPO. What is IPO? This is initial public offer. This is the first time sale of shares of the company to an unlimited number of persons. The company issues shares and places them on the stock exchange. And any interested investor or investment fund can purchase these shares. If you would like to participate in pre-IPO before this company is on the market, because as soon as it's on the market, anybody can buy the stocks at that exact price. If you would like to be someone the first before the company is on the market, well, there are some moments that you need to consider. We would not go deep into explanations about IPO in this video. If you're interested in this topic, please leave your comment below and we would discuss it later in details. What can be some pitfalls on this pre-IPO? There is not enough information about this company. There is not enough reports what's going on with their losses or debt or their profit. You don't know much about the company due to it wasn't on the public platform before. The next disadvantage is if you want to take part in IPO by yourself, you need to be recognized as a qualified investor. It means that you need to pass some exam from your broker, and it's quite large amount of entry. You need to have like $1 million on your account as a deposit, and the entry could be up to $300,000 if you're entering yourself. But you can always enter with your broker, yet not every broker gives an opportunity to take part in this IPOs. Broker will still take quite big commission from you. And for example, you would like to invest $5,000, but yet broker, it's not guaranteed that you are allowed to invest all of it, because broker have the number of stocks and it splits it equally to the investors. And probably from your $5,000, you will be allowed to invest like 1,000 or so, something like that. The next disadvantage is that during 3 months, this asset is blocked. Like you can neither sell or buy more. You cannot do anything. You just wait 3 months. If you participated in pre-IPO, they hold it. So for example, right after IPO, the price goes up, but you cannot sell them at this price. Let's say, for example, Uber. Uber's IPO was 10th of May last year, 2020, and when the period of 3 months was over, it cost the same amount, about $40. So it's your choice to be part of IPO or to buy stocks later like every other investor on the market. And again, not every broker gives you an opportunity to participate in such IPOs. What are the advantages? Of course, it would be really profitable. Like you can make 200-300% in these 3 months, but not all the time. Again, you cannot investigate these companies, and you do not know, are they going up or probably down. So let's sum up. If you start with a small amount of money, what can you do with them on the market? You can buy stocks, preferably quality undervalued stocks with dividends. So you take dividends and you can sell options on your stocks that you're holding. The next, you can buy ETF. It's a really good diversification there, and it's quite cheap. So you can buy more ETFs and play along with them again, doing value investment. And you can try to participate in IPO, but this is kind of risky, and you need to know a lot about this strategy of investment. Thank you very much for watching this video. I hope it was useful. Please subscribe to our channel and put a bell so you do not miss our videos. If you have any questions, leave them in the comment below. Probably you want to talk about some other instrument of investment, or you still have questions about these instruments. I would be happy to answer. Thank you very much for your attention. See you. Bye-bye.